Okay, so if you come to the financial statement analysis, we are going to be looking at the areas that they can give you a question on. Okay, the financial statement analysis is just like you are coming to measure the performance of a particular entity over a given period. Also, they can give you financial statement of an entity that they'll give you for 2 years. So you just look at the performance. You calculate certain ratios. They can give you the question on ratio analysis. So you can also use the normal ratio analysis to measure the performance of that particular entity. So they can give you ratio analysis. Okay. So they can give you a question that you have to use a ratio analysis. So ratio analysis is one of the tools that you can use to measure the performance of such entity or such organization. It can be between two countries. So they'll give you the data between the two countries. So they ask you that you should compute certain ratios that the examiner will be giving to you. Use those ratios now to what? To write a report by comparing the performance of the two entities. So we'll be looking at that. Then they can also give you information on budgets. Okay, information on budgets. So they will give you the actual results. Then they will also give you the original budget. Then they can also give you revised budgets. Okay. They can give you the actual budget, which is the actual performance for the year. They will give you what was our estimate at the beginning of the year before the actual. So they will give you the original budget or they will give you the revised. Whatever be the case, you need to compare the revised budget to what? To the actual budget. The revised budget is now the actual estimate for the year. It's just like you are at the beginning of the year, you are saying that, okay, you are going to be spending 1,500 on food items. Okay, you are going to be spending 1,500 on food items. After 2 weeks, you have realized that no, this amount is too much. So you have now revised your budget to 1,200. So this is the amount that you budgeted to spend for what? This is now the new amount that you budgeted to spend for the months. At the end of the day, you have ended up spending 1,700. So you now compare your new budget now against what your actual. So whatever be the case, you are going to be using revised budget against the what? The actual. How do we do the budget analysis? We just look for what is the difference. We budgeted for 1,200. We are now getting 1,700. What happened over there? Our estimate has increased by 500. So how do we find the increments in percentage? We do the 500 divided by the original or the revised budget multiplied by 100, which is what we call the budget outcome. Okay, the difference in the revised budget and the actual budget. What is the difference? We look at it, we calculate it in figure, and we also calculate it in percentages. So we use that to just write something. Okay, the budget for the year was 1,200, but the actual has been what? 1,700. This shows that our actual result is 20% higher than this one. So that is what we are going to be seeing. Or the revise is 20% or 30% lower than this. So that is what you are going to be saying. So what is happening? Just pick what you have calculated and just talk about it. It is only 10 marks. So you don't have to talk plenty about that. So we also look at they can also ask you to analyze the performance using what we call the budget outcome. Okay. They can also ask you to do what we call the common size. Okay, they can ask you to do common size analysis. And the common size analysis, it is always the vertical common size analysis that we use. So we use the vertical one. We have the horizontal, but they will always examine you on the vertical one. So what we do is that we come to our statement of performance, statement of financial performance. Okay. Under the statement of financial performance, we use a base. Okay, the base will always be the total revenue. So you use a total revenue. So what you do is that other items in the statement of financial performance will be expressed as a percentage of our total revenue. So if our total revenue is 2,000 and our compensation for employees, is 500. The question is, what portion of our total revenue is the compensation for employees what occupying? Or what percentage of our total revenue is being used to what? To cater for the compensation for employees. That is what we do. So we do 500 divided by 2,000 multiplied by 100. So you just find that what if you are doing it for statement of financial performance, what you do is that the total revenue will be the common base, and you express other items in the what? In the statement as a percentage or as a proportion of the total revenue. If you come to statement of financial position, so let me just say statement of financial performance. Okay, so let me write this one in full. Financial performance, statement of financial position. What we do is that our base will always be the total assets. So other items over there will be written or will be expressed as a percentage of the total assets. So we just look at it. Okay, our equity investment forms 50% of this one. It means that our capital asset or our assets is mainly what? The equity investment, because equity investment is forming a major part of what? Of the asset. So one of the company's long-term assets is the equity investments. So what you have seen, that is what you are going to be talking about. It is 10 marks. It is not a financial reporting analysis that you have to be writing plenty things for 20 marks. No, it is only 10 marks. The calculation will take like 4 or 5. The report will take like 5. So you don't have to, what you have seen, just write on what you have seen. Okay, compensation for employees is a major expenditure for the what? For the district or for the country, because it forms 55% of the total revenue. That is all. That is all you have seen. Just move on. There's nothing plenty that you have to talk about. It's only 5 marks or 6 marks. Okay. But if you come to the ratio analysis, you don't have to suffer. You don't have to go to the exam hall with anything like memorizing the words, the formulas. No, because the ratio is always going to define itself for you. The only ones that you can say, okay, maybe you need a formula to calculate is what we call the net debt percentage. Okay, the net debt percentage. So this one, it is not like the item is not defining itself. So this is the one that you can say, okay, you are going to be looking at your financial assets, minus your total debts. Okay, so this is the one that you can see for all the non-oil primary physical balance. So the physical balance is just the what? It's just our surplus that you are having there in the statement of financial performance. This, you can calculate this using cash basis or accrual basis. If you are using accrual basis, which the question will be given to you, if you're using accrual basis, the surplus that you are getting from the statement of financial performance is your physical balance. But if they say primary is, we are talking about what? Those things that we are going to be using to generate the revenue. Those ordinary items. Interest is not actually what attributable to the profits. Okay, so what we do is that we take the interest out of the what? We add the interest back to the surplus. We add the interest back to the surplus. That is what we call whenever they are saying primary. So you use that particular one and so on and high up.
Hello, sir.
Yes, please.
Please, can you go over the net debt?
Okay, the net debt is just a financial asset, and we are going to be determining what we call the financial asset. Those assets that can be converted into cash, that can be traded. Those assets that can be called financial instruments. So we have the receivables, we have the cash and cash equivalents. Then we now add the equity investments. Those are the financial assets minus the total debt. We have a question, so I will show that. Okay, I'm talking about the non-L primary physical balance. So the physical balance is just the surplus that you are getting. At the end of the day, if you prepare your performance statement of performance, what is the surplus or what is the deficit that you are getting? That particular deficit, there should not be revenue relating to what? To oil. So you'll be having some budget funding amounts. The question will give you annual budget funding amount, which is relating to petroleum. Okay, so you take that one from revenue before you calculate your surplus now. But the surplus, if you are calculating it, if they are asking for primary, we are talking about those ordinary activities that we have to what? Carry out to generate the revenue. So interest is not part, because interest is mostly not related to what? To our day-to-day activities. We might be taking loan for an activity that is not part of our normal activity to generate what? Whatever revenue that we are generating. So if they ask primary, add the interest back to what? To the surplus or the deficit. If they are saying no oil primary physical balance, add the interest back to that one. And the physical balance or the surplus that you are going to be getting should be without what? The annual budget funding amount, which is relating to petroleum. You should take that one off, or the question is going to give you an amount on that so that you adjust it against your revenue. That is if you are using accrual basis. If you're using cash basis, it means that every expenditure in terms of capital expenditure is going to be written off. So you have to calculate your physical balance by including the capital items also, because we don't use capital consumption and those things for cash basis. Okay, so the question will always tell you something about that. Okay, so let's see. Let's pick questions and see. For the if you have ratio, if you are giving ratio analysis, then you should thank God, because the ratio is going to define itself for you and is going to be telling you how you should calculate such ratio. So let's take the question number one. We are going to be trying three. So we try all the three: ratio analysis, common size, and also the budget. How do we go about, if you have a budget, how do we go about it? So someone should help us with the reading. Can someone help us with the reading?
Where are our ladies?
Someone says she has lost her voice.
The
Question
ladies,
one.
let's call them on.
Presented below are the financial statements Ghana and its neighboring country, Nigeria, who attained independence. Okay, presented below are the financial statements of Ghana and its neighboring country, Nigeria, who attained independence. The statement of financial performance for the year ended December 31, 2018.
Okay, just leave those ones. Let's come to the statement of financial position is also here. Okay.
Additional information. A. The total market value of all final goods and services produced domestically in Ghana and Nigeria for a fiscal year amounted to 145 billion cedis and 110 billion cedis respectively. B. According to the Statistical Service data, the population of Ghana and Nigeria is estimated at 20 million and 50 million respectively.
Are these people
C.
crazy?
Included.
How can Ghana be having a population more than Nigeria?
Understatement.
Let's move on. It's for examination purpose.
Okay. Included in the non-tax revenue is the annual budgeting funding amounts of 2.1 billion and 1.8 billion Ghana cedis for for Ghana and Nigeria respectively. D. Included in equity instruments of the two countries is loan and advances of 300 million cedis and 2.5 billion cedis for Ghana and Nigeria respectively.
Okay.
Required. A. From the information provided, compute for the two countries respectively, grants to revenue ratio, wage bill to tax revenue ratio, interest to revenue ratio, GDP to debt, debt to GDP ratio, capital expenditure to total expenditure ratio, gross debt, net debt percentage, debt per capita, non-oil primary balance to GDP, non-oil fiscal balance to GDP. B. Based on the results in question A, write a report discussing and analyzing the financial performance and financial position of the two countries, including your report the limitations of the analysis of the two countries.
Okay. So you can see that the only ratio which you might not be seeing in the exam is which you have to memorize is the net debt percentage and the non-oil physical balance to GDP. If you really understand the physical balance, the non-oil physical balance, you're just talking about the surplus for the year, but it should be devoid of what anything that is relating to the petroleum, and that is we have given you that one. Included in the non-tax revenue is the annual budgeting funding amount of 2.1 billion and 1.8 billion for both countries. So our revenue, we are going to be adjusting it with those figures. So we should not have any information with oil. And also the net debt percentage, those are the two. But apart from that one, this ratio, you don't need to memorize them. Okay, because the ratios are going to be defining themselves for you. If they say grant to revenue ratio, how do you calculate that? Grant to revenue ratio for both countries, grant to revenue.
Grant over total revenue.
That is it. The ratio is going to define itself for you. You don't have to memorize anything. You just have to pray that, okay, they will give you the questions that the ratio are going to be defining itself for you. And most of the ratios are going to be defining itself for you. How do you do the computation for the ratio? This is what you'll be doing. Okay. This is going to be for 5 marks. So sometimes you can do your calculation without showing it. Okay. You can do your calculation without showing how you calculate the figures. You can just draw a table and put the figures under the two countries. There's no problem with that. If you check the past question, that is how they normally do the computation. They'll just bring the figures that you have calculated there, and that is the end. Nobody is coming to come and show, okay, grant to total revenue or grant to revenue ratio is grant over total revenue. Then you come to the first country, you take their grant divided by revenue. For how many marks? Look at the ratios. Look at the ratios that you are asked to calculate. Okay, the ratios that you are asked to calculate for the two countries. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, and this is 10, and this will just give you maybe 4 marks. And you are going to be calculating 10 ratios for two countries. That's in all 20 ratios. Are you saying that if they give you ticks for the final answer, it will not be up to for the 4 marks, and you want to show grant over total revenue, then you take your calculator and you'll be singing grant over total revenue, grant over this. We don't do that in public sector. Just go there, you can do the calculation on your answer booklet. Just bring the answer over here. The focus is not about the calculation. You are using those figures to write reports. Okay, so just you can do it in a table form. Then you can look at the ratios here. Okay, then you can look at the two countries here, Ghana, and you can have the Nigeria over here. So what you do is that just write the ratios one by one. So we know that the first one is grant to revenue. Okay, so grant to revenue ratio. So you just go to the question. How do we calculate grant to revenue? Grant to revenue is calculated as our grant, which will be the income, grant to revenue. So they are talking about the grant income, not grant as expenditure. Okay, so let's count to the grant. What's the grant amount for Ghana?
$1.3 billion.
300.
Okay, so what is the total revenue?
53,450.
Okay, what are we getting as the percentage for Ghana?
Two 2.43%.
Okay, so I'm getting 2.43%. Let's go to the Nigeria. What is their
$2.11.
okay? 2.11. Please don't go there and be doing how you are getting these figures. No, you don't have time. Okay, so just bring the figures over here and move on. The next one is what? The next calculation that we have to do. Okay, the next ratio. Let's go and pick the next ratio there. What is our next ratio? Wage bill to tax revenue ratio. Wage bill. Wage bill is what?
Compensation for employees.
Compensation.
Okay, I saw Hannah.
Sorry, sir, I withdraw. Sorry.
Okay, thank you. All right. So let's come to compensation for employees and the tax revenue. What are the tax revenue here? The tax revenue is the domestic tax and then the international tax. So these are their tax revenue. These are their tax revenue. So let's find the tax revenue for Ghana and Nigeria so that we can use them to calculate the ratios for them. I'm having
44650.
Okay. Nigeria will be what? So
300.
38,330.
okay. So let's calculate the wage bill now. The wage bill will always be compensation for employees. So let's calculate that now. For the first one, we have the 29,800 divided by 44650 multiplied by
66.74 for Ghana.
66.
0.74 for Ghana.
Okay. 66.74. So wage bill to tax revenue. Okay. 66.74 for Ghana. Nigeria is what?
52.96.
52.96. Okay. So let's go to the next one. The next ratio. The next ratio is interest to revenue what? Ratio. So interest to revenue ratio. The interest, they are just talking about the debt interest. So interest to revenue ratio. If they didn't mention the revenue, it is total revenue. Okay, the total revenue. So let's go to our statement there. Okay, let's go to our statement there. Look for the interest and also, so the interest is how much for Ghana?
$19,660.
19,600.
Okay.
1960.
So what will be the ratio for Ghana? The interest to the total revenue ratio.
36.78
Okay. We are
for
having
Ghana and then 20.03 for Nigeria.
so 36.78 and
20.03.
20.034.
03.
Okay. So let's come to the third one. Please don't go and be showing that you want to show the examiner how these figures, nobody is going to mind you. So do your, okay, debt to GDP ratio. Debt to GDP ratio. How are we going to be calculating our debt? We can calculate our debt from what? From the statement of financial position. Okay. The debt that they are going to be talking about will be the domestic loans, external loans, and also the domestic loans. Okay, it doesn't matter if it has been classified as what? As current liabilities or non-current liabilities. They are all debts. So you pick the debt one by one over here, debt over here, which is 1 plus this one plus this one. The same thing, we come here and calculate their debt like that. Okay, so let's calculate the debt for them and see how we can go about that. So the debt for Ghana is, what is the total debt for Ghana? 11240 plus 52,000 plus 65400.
128,640.
Okay, you have to know that they are keeping 6 zeros at the top. These figures are in million, isn't it? Okay. What is the domestic product? What is the gross domestic product? The figures over here. Okay, the first one is the gross domestic product. So they say the gross debt to the GDP. So we have the debt divided by the GDP, and the GDP for Ghana will be 145,000 because we are keeping 6 zeros at the top. So you take the million off, you have 145,000. And this one, you take the million off, you have 110,000 for Nigeria. So let's do that. Let's calculate the debt. I'm having 128,640 divided by the GDP, which is 145,000. What are we having?
88.72%.
88.72. Okay, you can, they are not asking for ratio, so you can just leave it for in like in decimals. There is no problem with that. If you do it in percentage too, okay, it's ratio. Okay, no problem. So let's do it multiply by 100. Okay.
Say,
Yes, please.
please, when you look at the additional information,
Okay.
the D,
Okay.
there's something on it about loans. I want to find out if it will not affect the domestic loan or the external loans.
Those loans are the loans given to employees. Okay.
Okay.
They are loans
All right.
given
Thank
to
you.
employees. Oh. So we have the debt to GDP. Yeah, Senior, you say you are getting.
That is 88.72.
Okay, 88.72. Okay. What about the
Please get to the question. Let me see.
Wow.
Oh, where are my bounded things? One zero four.
104.
104%?
Yeah.
Yes.
So these people. Okay. So let's go to the next one. The next one is what? Is capital expenditure to what? Capital expenditure to total expenditure ratio. Okay. They are talking about the capital expenditure should be the amount that you are using in the purchase of what? The long-term assets. Okay. So let's come here. Let's come to our capital expenditure will just be your non-current asset over here. But this should always be acquisition of what? Long-term assets. So PP will be part of 4,200. Okay. Or our total amount is, let me just pick the total amount. Ghana is 14,200. Okay, that is a total non-current assets. But not all of this amount will be expenditure on capital assets. Okay, if you are talking about capital assets, we are talking about maybe construction of roads, the infrastructure, those things that are going to be in assets. Okay, but there's something over here. For Ghana, is 14,200. For Nigeria, is 7,600. But there is a footnote here that is telling you something about the, let's come here. They say included in the equity instrument of the two countries is loan and advances of what? 300 million or 300 billion and also 2.5 billion for Ghana and Nigeria respectively. Loan and advances, are they capital expenditure? Are they acquisition of capital assets?
No.
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 You have to come and adjust the total asset for them with these figures. It means that these figures have been included. So you come to Ghana, you take the 300 out of this one. Okay. So you take the 300 out of that, you come to Nigeria too, you take the 2.5 from that figure. So you adjust them to reflect your capital expenditure. So I'll have this one, then you adjust with what? 250. Okay. So what are we getting for Ghana and what are we getting for Nigeria?
39,000 for Ghana.
Okay. No, it's not 3,000 we are adjusting. It's
It's
one.
13,900.
Okay, 3,900. And
It's 14,000.
okay. So we have 17,350,
17.
isn't it? Okay. So they see capital expenditure to the total expenditure. So this will be your total expenditure over here. This is a total expenditure. But this total expenditure,
Sir.
yes, please.
Please, the Nigeria one is 2,500. Not,
It's 2,500. Are you sure?
yes, yes. If somebody can check. Taking 6 zeros out of it will be 2,000. I'm getting 15. Sir.
It's 2,500.
It's 2,500.
Yeah.
Okay.
I'm getting 15,100.
1,500. Okay. So that will be 2,500. Sorry. So we have 2,500. So that will be 15.
15,100.
Okay. 15,100. These are the capital expenditure respectively. But they are saying capital expenditure to total expenditure. Okay. The total expenditure that you have over there are for revenue items. So if you want to find capital expenditure, just add the capital expenditure to the revenue expenditure that you have before you find your. Okay. So the total expenditure for the year will be this figure plus the one that is relating to the capital expenditure. Okay. Then you add the Nigeria's own also to this figure before you find the proportion of that. I saw Auntie Millicent, I saw your honor.
Yes, please. Can you go over the capital expenditure again? My network went off.
Okay. Okay. The capital expenditure is the amount that we are spending on acquisition of non-current assets or capital assets. Okay. So the non-current asset that we have over here is 14,200 and 17,600. Okay. If nothing has been said about these ones, it means that these are all acquisition of capital assets. If nothing has been said about, if there's no footnote to this one, it means that this is relating to acquisition of capital items. But the footnote is saying that, okay, the footnote is saying that included in the equity instrument of the two countries is loan advances of 300 billion and 2,500 billion for Ghana and Nigeria, respectively. So what is the equity instrument? The equity instrument is part of the figures that we have added. These are the equity instruments. So it's part of these figures that we have added to get these figures. But the loan advances are no acquisition of capital items. So it means that you have to come and take your loan of 300 over here and 2,500 over here. If you do that, you'll be getting 13,900 for Ghana and 15,100 for Nigeria. So if you want to know your total expenditure now, you will now take the 13,900 plus the revenue expenditure. So your total expenditure will now be calculated as, okay, your revenue expenditure, which is given to you over there, plus the 13,900. So let's go and get the revenue expenditure from the statements, because we have to have the revenue expenditure in our total expenditure before we find the percentage. You can't use the total expenditure as the base, no, because the revenue expenditure is not captured in the total expenditure. So what is the total expenditure? Including the revenue expenditure. So total expenditure including both. So that will be what you are going to be. That's how you are going to be calculating the total expenditure. It will be the total revenue expenditure plus the expenditure on this asset itself. That will give you the total expenditure for the year. Then you find the portion that is for the capital expenditure. All right. So we have 63 plus 63,100. 63,100 over here. So what will be the total expenditure for?
A question, please.
Yes, please.
So supposing it's a financial, how do you get
Supposing is what?
a financial asset?
The
So
what would the question be telling you?
no, so like as they have said a capital expenditure, but it's not a capital expenditure, but it's a financial expenditure too.
The
Expenditure.
financial expenditure to
Expenditure.
just to expenditure. Financial expenditure to expenditure.
Yeah, can you scroll down some?
Okay.
It's where the capital expenditure is.
Okay.
Okay, so the question, so supposing the question is a financial asset to total expenditure, how do we identify the financial in the question?
Financial asset is the cash and cash equivalents plus receivables plus the equity investments.
Okay. Thank you.
Okay. Yeah, as of
Sir,
yes, please.
is the capital expenditure, is it that the equity investment is added to it? Or?
The equity investment is also, yeah, the equity investment will be part of it will be added to it, but the loan advances is not part of capital expenditure. It's not a long-term expenditure. It's just a loan that we are giving to our employees. Okay, but they are going to be taking this particular, they are going to be taking time to pay. So that is why they are classifying it as a non-current asset, and they are including it in equity investments.
Okay,
Okay,
thank you.
all right. Auntie Millicent, is it the old one or the new one? Okay. So what are we getting for the first one?
18.05.
18.05. So we have the capital expenditure
to total expenditure.
18.05. Can someone confirm that?
Yes, confirmed.
The second one, 24.24.
24.
Both confirmed.
Okay. Let's go to the next one.
Please, the financial asset you are talking, cash and cash equivalent plus receivable and what? Inventory.
Equity instruments, equity investments. Inventory is not part.
The total expenditure.
Yeah.
You said we would take out the 13,900 for Ghana from the total expenditure.
No, I didn't say that. I say you add them. We are doing capital expenditure. So capital expenditure should be part of the total expenditure before we find the percentage. So we add a 3,900 to this one. To
the 60.
Yeah, which is the revenue expenditure.
To get the total. So that's what, to get the total expenditure.
Exactly. Okay. If you find the capital expenditure on this figure too, okay, on this one too, maybe they might consider you, but this is what you are doing over here is not appropriate because out of this expenditure, the capital expenditure is not part. So you can't find a proportionate of the capital expenditure to that. Okay, you can't find a proportionate of the capital expenditure to expenditure that the capital expenditure is not part of. Okay, so if you are going to the market and you have purchased items that you are going to be using for a day, and you have purchased an item that you are going to use for maybe 2 days, you can't say, okay, if I should, or what is the proportion of the items that I'll be using. So what proportion of the items that I've purchased for 2 days over the what of the day one? No, if you want to do your total expenditure, it means that the items that is going to be using for 2 days must be added to those one. That is the total amount that you have incurred. Then you now express that as what? As a percentage of the total expenditure. Okay. But if you do it, maybe over this one, maybe they might consider you, but that will not be a true measure of that particular item. Okay. The loan advances are not expenditure that we are, this is not expenditure. Loan advances are not expenditure. So that is why we didn't include it as part of the total expenditure. Okay. So maybe if you do it, the capital expenditure over only the revenue expenditure, okay, maybe they might consider you over there, but that is not going to be a real measure of the capital expenditure to total expenditure. Okay. Let's come see.
If that's not the real measure, how would they consider you?
Or you are seeing total expenditure there, so you can just say that is the total expenditure. So you just write it, no problem. Okay. So they are saying total expenditure, and you can see total expenditure there. So you have taken the total expenditure to that figure. Okay. So let's come to the gross debt. Okay, we have already calculated a figure for that already. So maybe if you can actually remember that one that we have the gross debt for. Okay. The gross debt is what? It's just the total debt. Okay. Just add all the debts. We have done that already, but just go and add them again. That is a gross debt. Okay. What is our total debt for them? The 11,240, 52,000 and what? And 65,400. What are we getting?
12,68,40.
Okay, so we have
12,68,40.
68,40. Okay.
40.
Nigeria is what?
One 14400.
Okay. 114400. Okay. So this one, you have to put currency in and you have to attach currency to it. Okay. So
you can put it in brackets, right?
yes, please. So you can add negative to it because that is a debt. Okay. So if you put it in a bracket, there is no problem to that. But if you can actually interpret that, then if you leave it as positive too, there is no problem because you know how you are going to be using that figure to do your interpretation. You know that is debt. Okay. But it will be okay if you add the negative to it with a currency sign. Okay. So we have the net debt what? Percentage. The net debt percentage. Okay, so we have the okay. So let's count to the net debt percentage. So the net debt is just your financial assets. Your financial assets minus your gross debts. Okay. So we need to find the financial assets. The financial asset is the cash and cash equivalent plus the receivables plus the equity investment. Okay. Plus the equity investment, including the loan and advances. They are money that you are going to be taking from those people. So you can actually treat that one. You can factor the receivables. You can also factor the loan and advances. Okay. So let's get that our cash and cash equivalent. So we have 1,300, 111 plus 3250 plus 10,000. I'm getting 14,3504 for Ghana. Is that confirmed?
Confirmed.
Okay.
14,350.
So Nigeria will be 2980. I'm getting 15,880. Okay. So can we find our net debt percentage now? Just we have gotten their gross debt.
Hello, sir.
Yes, please.
Please, so can you mark the figures you are adding so that if you can mark those figures, sir, just do an mark.
Please, financial assets will always be equity investments, receivables, and cash equivalents. Maybe if you have short-term investment over there, you have to add. Okay.
Thank you very much.
All right. So let's get those figures and now come and do. So can we find our net debt percentage now? Net debt percentage. So Nigeria will be 1,400. Okay, I'm having negative 98,520. Okay, so let's come to Ghana. You find their financial assets and you net it against the gross debt. What will be the figure?
What's the gross debt figure for Ghana?
The gross debt figure is here, 126,840. Okay, that's only that one is taking that long time.
190.
Okay. Minus 126,840. Okay, I'm having 112490. If someone can confirm that. Their financial
Correct, sir.
Okay.
Confirmed.
Okay. So let's move on to the okay. So what are they saying? Debt per capita. Debt per capita will be what? The gross debt divided by
Population.
Divided by what?
Population.
Per capita.
yeah.
Divided by population.
Someone want to say something?
I'm asking the net debt. Is it not supposed to be a positive figure?
Okay. How? The financial asset is what? It's not asset.
So the financial asset figure for Ghana, we had 14,350.
Okay.
Right.
What is the debt figure? 126,840. Which of them is higher?
Okay, but in the answers you put a minus figure beside it.
We are doing financial asset minus the gross debt.
So for the gross debt figure, it was minus 126, or it's not.
We
It's
are
not minus.
we are not taking it to be man. It is the debt is a liability already. So that's
Okay.
why we are adding a negative to it to mean that that is a liability.
Oh, okay. Okay.
Are you okay now?
No. Yes, please. Thank you.
Okay. So we have the debt. Okay. The one that they are saying that you people, your debt per capita, the one that you are saying that a Ghanaian is owing like 20,000 Ghana cedis. That is what they are asking you to pay. So what is the debt burden on every citizen? So this will give us so we take their debt figures 126,840 divided by their population. So Ghana will be 126,840. So 126,840 divided by the population of Ghana. Okay, please don't go there and be using your own population that you know. The question will always give you the population. According to the statistical service data, the population of Ghana and Nigeria is estimated as, so this will be 20 million. We are keeping 6 zeros. So all these figures are in million. You always have to pay attention to that. Okay, all these figures are in million already. So if you have a 20 million, it means that that will only be divided by 20. I'm getting 6342 million per every citizen of Ghana. Is that correct? Okay.
What's the figure?
6342 per every citizen.
6342. You say that's multiply by 10 raised the power this thing. So I don't know. That would be 0.006.
Multiply by what?
When you divide the figure, you are getting 6.34 times 10 raised the power -3.
How? Why are you getting the negative and those things for? Why are you doing the power and those ones?
Okay, so the figure is 12,640
Million.
divided by 20,000. Okay. I omit the. I could have taken this one. Okay, that's fine.
Okay. So Nigeria, let's look at the Ghana, every citizen in Ghana over here. Please don't get annoyed. This is just a work. Okay, you are not owing this amount as a citizen. Okay, so 11,4400 divided by 15. Nigeria is having, their one is rest. So they are having 7627. 27. Okay. But right now they say that the debt per every citizen is 20,000. The last time I saw that, okay. So maybe our children will come and pay.
They should use some year's salary to pay so that we start afresh.
Whose salary are they going to be using?
Are the citizen, of course.
Senior, your salary.
Who are the citizens?
Aren't we one?
Do you want us to sell the country without your knowledge?
We'll sell it.
Let's come to
sorry, they don't go there, please. Don't go there. Sorry, they don't go there.
It's no go area.
Let's come to
no go area. Trust me, no go area.
Let's come to the non-oil primary balance.
Say a quick one. So the per capita, what do you write by it? Do you write per person or you just leave it like that?
You write per the citizen, but there is no problem with that. They are asking per capita. So the 6348 is per capita. So the 6342 is just per capita. So you don't go and be paying attention to that. But if you have time, you can add per citizen. Okay.
So you can leave it blank like that, just the number.
Exactly. They are asking you for debt per capita. So the 6343 is per citizen, is to 1. Okay. So they have to understand. If they don't want to understand, that is their problem. Okay. Let's come to the non-oil primary balance. So the non-oil, the primary balance that we are talking about is just a surplus for the year. But this surplus for the year, what do we do? So we now look for a revenue. So we look at the balance, the primary balance, or we look at the physical balance. Okay. The physical balance is just the surplus, or so this the entity is using the accrual basis. So we calculate this one using accrual basis. So interest is not actually part of the expenses that we have to incur to generate maybe the revenue. Okay. So the physical balance over here, how do we calculate the physical balance? It will be calculated as a revenue net of the what? The revenue relating to the oil, which is the annual budget funding amounts. Okay. This will all be divided by the GDP of the country. So let's go there. Let me demonstrate how you are going to be getting these figures. Okay. So you start from the surplus for the year. What is the surplus or the deficit? Okay, Ghana is having what? our net operation result for Ghana is what?
9,650.
Okay, that is negative. Okay. What are they saying? We are saying that the annual budget funding amount, which is for oil, should not be part of it. But we have already included that amount before getting that. Okay, but let's come here. What is that amount for Ghana? Is 2,100. Is that correct? Included in the non-tax revenue is the annual budget funding amount of what? 2,100.
200.
Okay. Okay. So this particular 2,100 has been added before getting this figure. It was added as what? As revenue. So we now removing it means that it must be subtracted because it was first treated as revenue. So you bring the subtraction here. Okay, that is for Ghana. Interest should not be part of the what? The primary balance, because interest is not one of the primary expenses that we have to incur to. So the interest of this one, which has been subtracted, need to be added back. So we have the 19,660. So what are we going to be having?
One to 110.
Okay.
Negative 1 to 110.
Are you sure? I'm having positive 7,910.
Which one comes first? Okay.
7,910.
Okay.
19,667 minus 200. 9,650.
Can we go do that for Nigeria? 540. What is their annual budget funding amount?
So where from the 19,660?
That is the interest.
Okay.
The interest was subtracted, so you have to add back the revenue. The annual budget funding amount was treated as a revenue. So if you want to remove it, it means that you have to go and subtract it from your surplus. But the interest was deducted, so you go and add it to your surplus or your deficit. Okay, let's come to the annual budget funding amount for Nigeria. That will be 1,800. So they are also having a deficit there. So this will be a negative. So you have this one. Then you have 1,800. Then you now add their interest amounts. So we have 10,460. What are we having?
3620.
36.
3620.
Okay. Okay. So this is the what? This is the primary. This is the non-oil. This is the non-oil primary balance. So they are asking us to do it over the GDP. So you just divide these figures by the GDP, the gross domestic product for the two countries. So we have 145,000. And
but Nigeria has a positive balance, 55040.
Are you sure?
Yes, please.
Oh, Nigeria is sorry. I thought it's negative. So okay. So this one should be 540 plus 10,460 minus 1,800. Okay, 13,700.
13,700.
Okay. So let's look for.
Hello, sir.
Yeah, me too.
And sir, please, I don't understand. I don't know why we subtracted the non-tax revenue from the net operations result.
Agbesinyale.
Hey, no be easy.
Okay, it is well. All right. How is the revenue treated? How did we treat the revenue before getting the? If you want to get your profits, how do you treat your revenue? Revenue is an addition that we are
Yes,
subtracting expenses from it, isn't it?
yes, sir.
Okay. Included in the non-tax revenue is a revenue that is relating to oil, which is what we call the annual budget funding amounts. So included in the
Oh,
revenue was 2,100, which should not be included over there. So if this
okay.
particular revenue should not be included, it means our total revenue should be 53450 minus the 1,200. That's 2,100 that has been what added to the non-tax revenue. Okay. This particular 2,100 over here is increasing our what? Our net operation result because in addition to revenue. So if you want to remove it right now, just come and subtract it from this figure because this is our net what? Operation result. So come and subtract it over here. Or you can also calculate this one in a different way. You can calculate this one. So you subtract the 2,100 from this one. You subtract the 1,100 from this one. So if you want to calculate your total expenditure, you are going to be omitting the interest element. You'll be getting the same figure, but that is going to be too long for you. So you just ask yourself, what is the impact of the annual budget funding on our net operation result? It is increasing it, so come and subtract the 2,100. Okay, what is the effect of the interest on our net operation result? The interest is reducing it because the interest is an expense. So the interest was subtracted before getting this figure. So we have to reverse the interest now by adding. The revenue was also added before getting this figure. If you want to reverse it, you don't want to add, you have to go and subtract.
Okay.
I hope you're
Thank
okay now.
Yes, sir. Thank you.
Okay. Okay. So let's calculate these figures by the gross. You might not be seeing this, okay, but just that anything can happen. We just have to include the possible ratios and move on. So their gross domestic product for Ghana is 145,000. So we divide this by yes, please.
Please, the formula you have quoted there,
Yeah.
if I'm getting you clear, that means you are not the physical what plus the interest over GDP. That means you will not multiply it by 100.
You multiply by 100, yeah.
Okay. Thank you.
All right. So let's divide it by 145,000 over here. In Nigeria is, I'm sure that is 110,000. Nigeria is 110,000, I'm sure. Okay, so that will be 110,000. So you multiply your answers by 100%. What are we getting for Nigeria and what are we getting for Ghana? We're getting 12.45 for Nigeria.
For Nigeria.
Okay, and Ghana will be 7,910 divided by 145,000. Okay, and I'm getting 5.46. Can we confirm that and move on?
It's correct.
Confirmed.
It's confirmed.
Okay. So we have the physical balance, primary physical balance. Okay. We have the primary physical balance. So Ghana will be 5.46%. Nigeria is 12.45%. Okay. Let's come to what we call the non-oil physical balance. Okay. Non-oil physical balance. So if primary is not added, please, the interest will be considered. The only thing that will not be considered is the what? Is the non-oil revenue. Okay. So the non-oil physical balance is actual physical balance, but oil revenue should not be part. So this is how we are going to be doing it. So what we do is that the revenue is actually increasing our profit. So Ghana will be 9650. Then what we do is that we subtract the 2,100 from it. Okay, so the interest will be considered. If they say physical balance, interest will be considered, but it's only the non-oil revenue that will not be considered. So this will be for Ghana. Nigeria will be the 5040 minus the what? The 1,800. So interest will not be having effect. Interest will also be considered as part of the expenses that we have to incur. So we are looking for just the total balance, the total balance. Okay, so so if they say physical without
What
adding
are we
balance,
looking for? Non-oil, physical, or primary?
we are looking for non-oil physical. Primary is where the interest will not be considered. But if they are saying the non-oil physical balance, that means, okay, what is the balance? What is the surplus after using our non-oil revenue to finance our expenditure? What will be the balance? Okay, so you just take your oil revenue, which is the annual budget funding amount from your total revenue. Then you subtract all the expenditure from it. So you can take your 2,100 over here and now subtract the expenditure from the amount that you'll be getting. That will give you the physical balance. Okay. So you can also take the 1,800 over here and subtract the total expenditure from it. The answer that you're going to be getting is the physical balance. This is a physical balance. This is the physical balance, including the oil revenue. So if the oil revenue is not there, what would have been the physical balance itself? That is what we call the non-oil physical balance. You only consider the interest when they are adding primary to the physical balance. But if they say physical balance without the primary, it means that the interest will also be paid out of what? Out of the revenue generated. What are we getting for Ghana and what are we getting for Nigeria?
$11,750 for Ghana.
Okay. 11,750 for Ghana.
The negative figure.
Yes.
Yeah, it's negative.
Okay. But the first ones, they are all positive, isn't it? The primary balance, we are all positive.
Yeah.
Okay. Okay.
3240 for Nigeria. Positive.
40 for Nigeria. So this will now be divided by 145,000. And this will be divided by 110,000. Multiply by 100. Okay. I'm getting 8.10
For which one?
for Ghana.
I have Nigeria. 2.95.
95.
Okay. So 8.10. And so let me create another space over there. So we have the ratio. So we have non-oil physical balance. So we have negative 12. Okay, negative 8.10%. And this will be 2.95%. Okay. So you can see that Nigeria's own is going to be addition to the GDP, but Ghana's own will be a subtraction. We have to take 8.10 from our gross
To be a
domestic.
burden.
Okay. From the gross domestic product to pay this particular amount. Please, the ratio is going to define itself for you. So you don't have to memorize.
But it's not easy. Even locating the figures is even more than you defining your own.
Okay.
So it's not easy because you see the first one when we started it was okay, but now that you have to look for some items and be adding and subtract.
It's better you know your formula than.
That is why it's an exam. Okay. That is why it's an exam. Okay, let's come to the report writing. The report writing will always take the report format. So you'll be having the two. So who are you writing to? For the public sector, mostly you know identify who you are writing to. Okay, mostly you know identify. The question will not tell you where you are writing to, but if they are asking
To president.
to somebody that is identified in the question, then you write to the president of Ghana here, or maybe to somebody. But always you not see anything. Just write the two and leave it. Okay. Then the from, they will not even identify you as the person who is writing there. So you can just leave it. Okay. Then the date also, you can use the reporting date, or you can also write, this is just a format, so you just put a format there. Because the public sector, mostly, they will not identify who you are to write a report to and who is writing the report. So the only thing that is going to be important over here is the subject. Okay, so the subject can be derived from the question itself. So let's go to the question there, and then you can derive the subject from what they are asking you to do. Okay, so they are asking based on the results in question A, write a report discussing and analyzing the financial performance and financial position of the two countries, including in your report the limitation of the analysis of the two countries. So we can say analysis of the financial performance. Okay, so the subject can be analysis of the financial performance and financial position of Ghana and Nigeria. Okay, so you just put then you just write your introduction. You have to introduce the report to those people. Someone should give us a very nice introduction. Please don't go and be writing plenty English there. So the introduction, how are you going to be introducing this? What are you going to, I'm not going to be the one to write the exam. What are you going to be, how do you introduce the report? Okay.
Yeah. Hello, sir.
Yes, please.
Okay, I would like to try some more.
Okay.
The financial performance in the years or so and so was analyzed using the revenue, and also the financial position also analyzed using the financial assets of the of Ghana and then Nigeria. I sound too small.
No problem. We don't have a way of writing the introduction. The introduction, the way you think of adding the introduction, that's the way we think of, the way you think, or you feel that the report should be introduced. That is the only thing. Okay, you just have to tell the people what you are doing or what is the report about. So let me just put one over here. Okay, after computing, okay, this report is about the financial performance of this one for the year, and then this report is based on the analysis okay, computed above, or this report is based on the ratios computed above. Okay, no problem. After
Having done my professional evaluation of the performances of Nigeria and Ghana on their financial performance and financial position, I thereby present this report to you.
No problem. Okay. after computing, okay, after computing the above ratios in A above here is the, here is my, okay, here is my opinion on the what? On the financial performance and the financial position of the two countries. There's no problem with that, okay? So just have to, after computing the above ratios in A above, here is my opinion about the performance, or here is my analysis of the performance of the two countries. That is it. Very simple. Then you move on. Okay. How do you now analyze these two? Please, the ratios are plenty. You can't pick all of them. Okay, you can't pick all of them. So they are talking about financial performance. Okay, the ratios are plenty. You can't pick all of them. Okay, sometimes the ratio will not be plenty, so you can pick all of them and analyze it for the two countries. You can also pick this one for the two countries. But since they are talking about financial performance, what are the things that we have to look at? Okay, you can also look at the grant to revenue. Okay, they are doing what? We can look at the grant because the grant is a statement of financial performance item. So we can also use the grant to revenue ratio. You can also use the wage bill to tax revenue ratio, the interest to revenue ratio. You can also look at the debt to GDP. The debt to GDP has to do with financial items. Then the net debt, the debt per capita, that is also a burden item. And that can also be used to analyze the financial performance. We can also look at the physical balance and all those issues. Okay, so you can just pick some of the important items one by one and look at it. Okay, so you just come here and have you can title this one financial performance. Okay, so the financial performance, you can use the first one as grant to revenue ratio. Okay, grant to revenue ratio. For the grant to revenue ratio, what is happening there? Grant to revenue ratio, what is happening there? Which of these countries? Grant to revenue ratio, what is happening there? Ghana is what?
Ghana received more grants than
Okay.
Nigeria.
So how do you present this? How do you present this one? The grant to revenue ratio.
It's Ghana received more grants than Nigeria, which increased their revenue by 2.43% to 2.11%.
We are highly dependent on external donors.
So can I try?
Yeah, everybody can try. The floor is open.
Okay. It means I want to try. Grants contribute 2.4%, or it makes up 2.4% of our revenue. Oh, yes, that's my understanding.
Don't go there and be talking like a Ghanaian. So just pick the country Ghana and okay. In terms of revenue,
Ghana, yes.
yeah, in terms of grant generation or receipt of grants, 2.43% of the total revenue of Ghana is what is through donations or support from what, maybe donor parties or outsiders. Was what? 2.11 percent is for Nigeria. Nigeria is generating 2.114 from of their revenue from what, grant and maybe donations gift from other people. Okay. In terms of attracting the donors, Ghana is doing better than Nigeria, isn't it?
Yes, sir.
Okay. In terms of attracting people, you can know that Ghana is more attractive to the donors than what? Than Nigeria. But if you talk about issues of self-reliance, what is happening there? It means that we are depending on outsiders to finance our budget than what? Than Nigeria. So you don't have to talk about Ghana doing better. You also have to talk about the opposite of it. Okay. Why Ghana will be receiving more grants than what Nigeria. If you have time, you can add it. Maybe whenever grant is given to us, we always comply with what? With the terms and conditions attached to what? To grant, or we use the grant mostly for the purpose that it has already been given for. But Nigeria might not be doing that. Okay, Nigeria might not be doing that. So very simple, without talking plenty, you can just say that, okay, grants for the year under consideration, okay, for the year under consideration, okay, for the year under consideration. Please don't go and write my own. This is what I'm writing here. Anyhow you understand it, just put it like that. For the year under consideration.
But honestly, if this thing can, I will just quote what you are writing.
For the year under consideration, grants revenue, okay, grants revenue forms 2.43% of the total revenue of Ghana as against what? As against 2.11 of Nigeria. Okay. This implies that in terms of attracting foreign support, from donors, Ghana is more effective and efficient than Nigeria. Is plenty. Okay. So this one is only for 4 marks. Why do you have to add something again? If you want to add the issue about the opposite side is that Ghana's revenue is what? A higher portion of the Ghana's revenue is financed from support from donors than Nigeria. So in terms of the revenue generation, you can see that Nigeria is generating more revenue on their own domestically than Ghana. That is also another part of it. But please, if you cannot go with that one, just write what you have seen. Okay, just write what you have seen. Okay, the grant to revenue ratio of Ghana is 2.43 against what? Nigeria. This means that the total revenue of Ghana grant is forming 2.43% and Nigeria is forming 2.11%. This means that in terms of generating revenue through grants, Ghana is more efficient than Nigeria, or in terms of supporting your own activities with your own resources, Nigeria is more effective, or Nigeria is generating more revenue through domestic mix than Ghana. That is all. Very simple. If you like, you can add why Ghana is receiving more than from this one, or why Nigeria is receiving or generating more revenue from domestic mix than Ghana. This is only 6 months. Don't go and be. So just write what you have seen. That is very simple. You move on. Okay. You don't have to write plenty to do anything. This is going to be for only 6 months, or sometimes 4 months or 5 months. So you don't have to do anything. We can also use the wage bill to tax revenue ratio. So we can also use the wage bill to tax revenue ratio. You can just use maybe 3 ratios for all of them. That is all. So we have the wage bill to tax revenue ratio. Okay, so let's go to the wage bill to tax revenue ratio for. Okay, wage bill to tax revenue ratio is 66.74 for Ghana, 52.96 for Nigeria. What does it mean? You quote the figures that you have calculated before you write the meaning of or what this particular percentages or represent for the two countries and which of them is doing better. You have to know that wage bill is what? It's an expense, isn't it? So the one with the lowest what? The one with the lowest rate will be the one doing better. And the one with the highest one will be the one that is not doing better because this is a cost. Okay. So wage bill or compensation for employees seems to be what the highest expenditure item of what? Of Ghana as compared to Nigeria. This is because for the year under consideration, the wage bill to tax revenue, or Ghana is using 66.74% of its tax revenue to compensate what? The employees, as against Nigeria that is using 52.96%. It means that Nigeria is more efficient in controlling their payroll expenses as compared to what? To Ghana. Or Ghana might be having ghost names. We might be paying ghost names, or we are not efficient in managing our payroll, which might be as a result of having a lot of ghost names on the payroll. That might be the reason. So Nigeria is doing better than Ghana in terms of what? Managing their wage bill or managing their payroll. Okay, that is it. You don't have to. Interest to revenue. Interest to what? Revenue. Interest to revenue. The interest to revenue of Ghana is what? 36.78%. And Nigeria is what? 20.03%. Which of these countries is doing better?
Nigeria.
Okay, so what is the meaning of the 36.78% and the 20.03%?
So it means out of the revenue that we have, that's the amount of interest that we are paying out of it, interest from the loans that we are taking.
Okay. This also implies that Ghana is having a lot of what?
Liabilities.
A lot of borrowings. Okay, a lot of borrowings than what? Than Nigeria. And this can also be, you can see this is also what? This can be justified from the gross debt over here. You can see that Ghana is having a higher borrowings than what? Than Nigeria. Okay, so for the current year under consideration, 36.78 of the total revenue of Ghana is being used to what? To pay or to settle what? Interest. Or interest forms, or interest expense forms what? 36.78 of the total revenue of Ghana as compared to Nigeria, that is 20.03. Okay, this means that Ghana is having a lot of borrowings, or Ghana is having a lot of unsettled debt than Nigeria. Okay, and in this case, Nigeria is doing better because they are able to control, or they are able to look for cheap debts. It can be as a result of cheap debt. So that if you are looking, they might be having a lot of borrowing, but the borrowing will be cheap, very cheap. The interest will be very cheap. Okay, so managing, in terms of managing the interest, Nigeria is managing their borrowings, or Nigeria is what? Is not depending on what? On the borrowers or other parties for what? For it funding. No, as compared to Ghana. So Ghana, you can that is even why the grant is even higher than this one. Nigeria is using most of their what? Their local resources or natural resources to do their operations than what? Ghana, that is depending on the what? On the external parties. That is why our interest ratio is higher than that one. So if you cannot say all this in place, just what you have calculated, just put it there. Okay, for the year under consideration, interest expense forms were 36.78 of the revenue of Ghana as against 20.03 of Nigeria. This means that Ghana is using more of their revenue to finance or to service their debt interest than what? Than Nigeria. So Nigeria is able to manage their borrowings than Ghana. So in terms of interest to revenue ratio, Nigeria is doing better in managing their interest than what? Than Ghana. Full stop. You move on. Okay. Okay. So these three for financial performance is okay. Okay. These three for financial performance is okay. It's only 6 months. We don't have to. So let's count to the financial position. We can use our capital to total expenditure. We can also use the gross debt. Okay, we can also use the net debt. Okay, for this one also, we can also use the debt per the capita. For the financial performance, you can also, if you like, you can also rely on the what? On the physical balance also. Okay, it means that the Nigeria's what? Nigeria will be getting 12.45 of their gross domestic from what? From their normal operations. Okay. Ghana will only be supplying only 5.46 to that. Okay. But if you come to the financial position, just look at the financial items, the gross debt. Okay. The gross debt of Ghana currently stood at what? The gross debt of Ghana currently stood at what?
126.
Okay. And Nigeria,
1,840.
okay, Nigeria is what?
114,400.
Okay, between these two, which of them is having a better financial position than the other?
Nigeria.
Nigeria.
Okay, that is all. If you come to the net debt, what is happening here? If you want to use our ready-made cash, our cash that can be converted, if you want to use it to settle our debt, Ghana will settle and still have what? 124. Okay, 112,490, and Nigeria will be having 98,520. Still, Nigeria is having a net debt percentage better than what? Than Ghana. Okay, let's count to the debt per capita. The debt per capita. Okay, Nigeria is presenting what? A higher debt burden on the what? On the citizens than what? Than Ghana. Why? Because Ghana's population is higher than Nigeria's population based on this particular question. So this might not be that the Nigeria is actually having a higher debt burden on the citizens, no. But because Ghana is having a higher population than Nigeria, that is why Ghana's debt per capita is what? Is lower than Nigeria, because Ghana is 5 million populated, 5 million more populated than Nigeria. Okay, if they should have the same, if they should have the same population, Nigeria might be having a lower debt per capita than Ghana. So this is not actually what you can't use this as a factor because they are not of the same size, and this is one of the limitations of this report because the two countries are not of the same size in terms of what, in terms of the population, and they might not be of the same size in terms of economic growth. And these countries might also be applying different accounting policies. All right, so please.
And there's variation in the variables given.
Okay, so this is, you just pick, if you like, and just pick some of the items. If you don't know where to start from, the ratios that you have calculated, please pick them one by one, like at least 5 or 6 of them. Then you just write the figures that you have calculated and which of them is doing better. Okay, that is the report. You are using these figures to write the report. So they are asking you that now look for the performance of Ghana and Nigeria. What are the things that you use for the performance? You can use the ratios that you have calculated from the statement of financial performance. So those ratios that you have calculated over there, you can use it to look for determine their financial performance. If you come to the financial position, you also look at the ratios that you have calculated using the financials from the financial position. Then you just compare those two. Conclusion. In all, which country is doing better than the other one? In all. From the computation above, it can be concluded that what
Nigeria is doing well.
Nigeria is more efficient than Ghana.
Nigeria is doing well.
Okay, Nigeria is doing better. You always have to conclude. Okay, the conclusion from all indications, Nigeria seems to be doing better in all aspects than Ghana. Okay, that is all. Then you come to the limitation. The issue include the limitation. The limitation is the what? Is the size of the two countries. Okay, Ghana is more populated than Nigeria. Okay, if you count what these two countries are going to be using different currencies. So Ghana might be having this result because we want to change. You can look at the exchange rate of Ghana cedis and Naira. You can see that the Ghana cedis is going to be having upper hand in terms of the translation. So we have to translate Nigeria's operations because they are going to be operating in Naira. So we have to change it to the Ghana cedis so that we can have a common base. So the different currency is also a limitation to this one. This might not be giving us a true value because if Nigeria should be selling in Ghana cedis, their figure might be higher than what Ghana is having over here. But because of the translation, that is why Ghana might be doing better in some aspect than the Nigeria. So the size of the two countries is one factor, which is their population. These two countries might be using different accounting policies. What do you mean by different accounting policies? Ghana might be using cost model for their PPE. Nigeria might be using revaluation model for their PPE. So comparing these two, that is going to be a differences in that particular comparison. Also, the level of economic growth. Nigeria might be more advanced. The inflation rate and also those economic factors over there might not be the same. So inflation in Ghana and Nigeria are not going to be the same. Okay, so that can also affect the analysis that you have done. And what again? Okay, we have spoken about it. Yeah, the time also, the season, and also those ones can also matter. And the accounting policies can also be
the rainy seasons.
Okay, can also be an issue for those ones. This is how you are going to be doing the ratio. Computation of the ratio is very important, and the report is also very, very important. If you don't know how to go about a report, please just the items that you have calculated, just name them one by one. Say what you have seen, the figures that you have seen. Okay, this figure is for this country, or this year is this one. It means that the company or the country or the district assembly is doing better in this year than this year. Why? Because their grant to revenue is this amount in this year and this amount in the next year. Move on to the next one. Okay, it's holding 10 marks. All right. So let's look at what we call the common size. Then
okay, sir.
Yes, please. Yeah.
Talking about the format.
Yeah.
Is it for a normal report, right? And after the conclusion, you write your name there.
You can still write. You can still write. You can still write your name, sign, or you can put a signature there. There's no problem with that one too.
Okay.
All right.
Thank you.
Oh, you're welcome. So.
But don't go.
Yeah. Senior Millicent. And I say Senior Millicent. Okay, you are still senior. Because if you are Senior Millicent, as well now.
Yes. So please, how do you explain the debt to GDP?
The debt to GDP.
Debt to GDP, yes, please.
Okay. So the GDP is going to be in Ghana cedis, isn't it?
Yes.
Okay. So, and the debt is also in currency, isn't it? Okay. So what is the component of our debt, or what amount or what percentage of the GDP will be used to settle the debt?
Okay.
Okay. So if you are having an amount of 1,000 and you are owing somebody 500 Ghana cedis, okay, we are just saying that okay, the debt to the amount that you have, that will be 500 divided by 1,000. Is that correct? Okay. Multiply by 100. This will be 50%. So you'll be using 50% of the amount that you have to pay the person. So that is it. So the percentage of the GDP that will be used to settle the debt, or the component of the GDP that is for what? The debt.
Gross domestic product.
Are you okay? So we'll be using that percentage of the national income to what? To settle a debt. That is the debt to GDP. Are you okay now?
Yes, please. Thank
All right.
you.
All right. Let's be moving. Please, this one at least you need to get like 8 marks. The calculation should not be the calculation should not worry you. If it is ratio, you are not going to be suffering. If it is common size, you are not going. If it is any of them, you don't have to suffer because it's not a big deal. Okay.
We pray for common size.
Okay.
Did I have a question?
Yeah.
When writing your report,
Yeah.
the limitations, is it going to be in your conclusion, or you would state that one before you come and do your conclusion, or
You can also bring it after the what? Include in your report the limitation of the analysis. So they say you should include in the report. Okay, so you can bring the conclusion, but the limitation will still be part of the report. Okay, because the report will be on paper. So you don't come to a next page and write what the limitation over there, or you can write the limitation before you come to the report. Okay, before you conclude. So you include in your report the limitation of the analysis of the two components. So the limitation should come before the conclusion.
the conclusion?
Yes, please.
Okay, thank you.
All right. Please, let's take the common size. The common size, you just have to know the basis. Are you okay? So if it is statement of financial performance, they can give you statement of financial position. Your basis should be total assets. So every other item over here will be expressed as a proportion of the total assets. Can we take this one? Okay, prepare a common size for this one, and based on the common size performance prepared, you should analyze them. Okay, so please, if you are giving all the years, do it for all the 3 years. Are you okay? Do it for 2020, 2019, and also do it for the 2020, which is the budget. This is the budget, and this is the actual. So we budgeted for 20,200, and the actual result is now 16,450. Okay, so let's come to the common size. Common size too, you are not going to be putting how you calculate the items there. No. What you do is that you come to 2020. Okay, the 2020, you have the actual, you have 2019,
Horizontal.
the actual, then 2020, you have the budget. Please do it for all the statement given to you. Okay, this will all be done in percentages. So we have the percentage over here. Okay, just put the percentage at the top here so that you can just write the figures the way they are. Okay, so we have the percentage here, the percentage here. Okay, so let's count to the first one. The first item is what? Okay, we have the decentralized transfer, which is like a grant from the government. So this is for district assembly. So we have the decentralized transfer, the subventions or the money, the DCF, the DACF, which is the District Assembly Common Fund, the Development Fund, those ones all are going to be named as a decentralized transfer. Okay, so let's come there. The 2020, what are we going to be having? So that will be 2020 will be what? 16,450. So our common size, the basis will now be total revenue. So the first one will be, how do you find it? It will be the central transfer will be 16,450 divided by the total revenue figure, 39,950. Okay, multiply by 100. What are we getting for the first one?
41.18.
41.18. So we have our figure over here to be 41.18. Okay, let's go to 2019. 2019 will be what?
31.08.
Okay, 31 points.
08.
Okay, 31.08. So 31.08. Okay, the budgeted amount is what? What would be the rate for it?
35.88.
35 point what?
88.
Okay, 35.88. Let's come to the next one. The next item will be IGF. IGF. Okay, what will be the percentage for the IGF?
55.57.
55.57. Okay, actual is what? For 2019. Please let's okay, the years are at the top there. 2019 will be what?
So let's see the question.
64.16. 64.16.
54.
64.16.
Okay, 6416. 6416. 64.16. Budget 2020 is what?
60.5.
60.
0.57.
0.57.
60.57. Okay, let's go to then we have donation and what? Donation. Donations and grants. What will be the percentage?
3.25.
3.25.
3.25 for the first year. 3.25. Okay.
4.76.
4.76.
76.
Okay. The budgeted is what?
6. 3.55.
3.55. Okay. So this will give us what? If we put all of them together, we are going to have 100%, isn't it?
Yeah.
Okay. So you can put your revenue here. You just prepare it like the way the statement was prepared. So you come here and you come here. So let's come to our expenditure items. Okay. Okay. So we have compensation for employees, compensation for employees. So we have compensation for employees. Please don't go and be showing how you are getting the figures. Okay. Just do this. This is for 4 or 5 marks. Okay. You have done a lot of things to get all the marks. So 29,800 divided by the total revenue. Every item will be
74.59.
74.
74.59. So we have 74.59. Okay, actual is what?
60.90.
60.90. Budgeted is
4.40.
Please, can you take it again?
44.40.
44.40. Okay, we have.
And 46. Oh,
it's
46.
46.
46.00.
Okay, 46.00. Okay. So goods and services. What are we having?
25.78%.
25.78. 25.78.
Actually, is 24.
20.
4.71%.
24.7.
31.79.
31.79 for this one. 2019 is 24 point what?
71.
71%.
Okay. So let's count it. The next item is what?
Consumption of fixed assets.
Consumption of fixed assets.
Okay, consumption of fixed assets. So we have consumption of fixed assets.
Risk capital.
Okay.
Budgeted 29.80.
29.80. Okay.
2020 actual 0.60.
0.6.
Yeah.
Okay. 0.6.
Let's see the question, please.
36.47.
Hey, Sina, where are you getting your figures from?
Consumption of fixed assets.
Budget is 0.
Consumption of fixed
Budgeted is
assets.
0.
Budget is 0. So 220 divided by 39900 multiplied by 100.
You get 0.55.
Okay. So 220 divided by 39900 multiplied by 100. Yeah, 0.55. Okay. So Celia, maybe you are picking interest instead of the other one. So 0.55. Okay. This one is not a major factor because it's just something that we are consuming. So the increase of
The basic total expense.
total revenue. Every item in statement of financial performance is total revenue.
Total revenue.
Yeah. So we come to interest.
Interest.
Okay. So
49.21.
which one is that?
2020 actual.
49.21.
21.
Okay.
2019 actual 36.47.
36.
Budget 29.80.
29.80. Okay. What is the next item? We have grants. Okay, the grants is what?
$1.28.
1 point.
28.
Okay. 1.28. Okay.
1.08.
1.08.
3.41.
3.41. Okay. So we have other expenses.
No, I don't want to.
4.00.
Okay. 4.01. I'm getting 4.01.
Yeah, 4.01.
Okay.
Yeah, 4.0.
So that's the actual for
Budgeted 4.35.
4.35. Okay. 4.35.
3.58.
3.58. Okay. So we have total expenditure. Okay. the total expenditure, you can decide to add all of those ones that you have calculated, or you can calculate the total expenditure on the revenue. So 62
155.46.
155.
2020 actual.
Okay.
155.47.
47.
47.
Okay.
47.
So we have total expenditure here. Okay. So our net operation result will be negative 55.47.
Budgeted 115.54.
115.54. Okay.
127.29.
Budgeted is 115.54. So this will be 15.54. Okay, the actual for 20.
I have 127.29.
29.
Okay, so this will be 27.29. Okay, so this is how the common size for maybe at least 5 marks. Okay, so you come to the
I think
report.
the common size is good. Common size.
You have the two, you have the from, you have the dates, then you have the subject here. So the subject will still be the analysis of the performance of, let's see, what is the, okay, based on this one, write a report analyzing the financial performance of these people. So it will be the financial analysis of the financial performance of Okaja Municipal Assembly. That is it. Okay, so let's come to the introduction. How do you go about this report? How do you write it? Okay, so you come to the introduction. The introduction, you can still use the one that we have used. Okay. So you just come here. Okay, so the introduction, after the introduction, bring the figures that you have calculated. How many are they? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Some of them, they are not significant, so you can ignore their impact, like maybe grants, consumption of fixed capital. The difference is not that significant, so you can ignore them when you are doing your computation or your analysis. So just bring the items one by one. So we have a decentralized what? Transfer. Okay. So the decentralized transfer. Okay. We are doing the what? We are writing this report for the current year, which is 2020.
20.
Okay. Let's come here. In this current year, the decentralized transfer forms what? In this current year, what is the percentage of revenue? That is for the decentralized transfer.
41.18.
Okay, against what?
35.88.
That is the budget, but you have to first you do the comparison between actual and actual. Okay, before you now come to the budget. So in the year 2020, the centralized transfer forms what? 41.18% of the total revenue, or is the second highest what? Source of revenue to the district assembly, as against what? 31.08% in what? In 2019. Okay, this implies that in the current year, more funds has been what?
Transferred.
Okay, more funds have been more
Allocated.
funds allocated to the district assembly in what 2020. What might be the cost of this? What might be the cost of this?
The need for more facilities in the districts
Okay, so this increment
because of the deplorable nature of the district, the government wants to revamp.
Okay, okay. So let me just do a simple illustration over here. So what you do is that you compare, use a 2020 figure. Okay, okay. What component of the revenue represented by the IGF for the 2 years? Okay, so component of the revenue represented by IGF for the 2 years. Okay, you talk about that. You talk about the components. So the components, are they receiving more in what in 2020 than 2019? And also, if you like, you can also draw the conclusion to what to the budget that they are having. You can see that the actual is even more than the budget. Okay, then you now ask yourself, what will be the cost? Okay, what is the likely cost? Likely cost of the increment or the reduction. So the likely cost of the increments or the increase or the reduction. Okay, you have to know that the decentralized transfer, the district assembly, okay, in some ways they don't have what a direct control over that particular one. Okay, but the government is the one that is going to be giving it to them based on the developmental project that the government want to undertake. So you can say that the increase of the 10%, which is in the 2020 decentralized transfer revenue, might be as a result of what government want to extend more developmental project to that particular district, or this particular district are using what the funds for the purpose that they have been given to them, or there are a lot of natural disasters in that particular district that the government want to take care of, like the one that happened right now, the battle one. So if they are doing the allocation to cater for those ones, they will be having higher allocation than other districts. So this might be as a result of what the increase in that particular one. Government want to undertake more developmental projects in that particular district, or these people, they are using the funds for the purpose that it is given to them for. Let's come to the IGF. Okay, so you now bring the IGF as another one. Okay, so you now bring the IGF. Okay, so if you are doing the common size, the IGF should count. Okay, talk about a component of the IGF of the revenue, component of the revenue represented by IGF in the two components of the revenue represented by the by this will be decentralized transfer, which will be so DF. So by IGF for the 2 years. Okay, for the 2 years, and maybe comment on the component. Is there a reduction or there is an increase? Okay. Comment on the reduction or comment on the outcome. Comment on the outcome for the years. So you can also do the comparison between the 2 years, and you also draw a comparison maybe to the budget. That is why they are also giving you the budget. So let's come to what we are having for these two. Okay, it's not anything big that you have to be struggling over there. So let's count to the IGF. Okay, for the current year, IGF is still what? The highest what? Source of revenue for what? For the district assembly. For the IGF is still the highest one. But what happened? 55.57% for 2020 as compared to
It has reduced.
okay, as compared to 2019, which is 64.1%. Okay,
And even the budget.
at the start of the year, the entity or the district assembly is even budgeting for what? 60.57. Okay, but this is also falling below the what? The budget. Okay, this might due to this reduction might be as a result of, then you state what you think is as a result of this one.
Laziness of the workers at the assembly.
Okay, laziness can also be, laziness can be a factor there, or maybe we don't have enough resources to do the revenue mobilization. So laziness can also be a factor there. Revenue collectors, so laziness can be, okay. We can also talk about what so the laziness can be part and the lack of education on the importance of what? Paying your rates. So lack of education to the public, or lack of public education with regards to, so maybe the public is not, lack of public education to the native of that particular assembly. So people, they don't see the need for what? For paying their property rate and also the other items. Okay, so we can also talk about.
It's not that we are not educated about paying, but when you see what they put the money to.
Okay. So inadequate facilities to cover. So it can also be inadequate facilities to cover the revenue, to cover the target point or something. Okay, so maybe we have a lot of places, but we don't have the resources to what? To go to those places. Some people, they might be living outside the river and you have to go there and you don't have the resources, you cannot go there. Or can also
to cover the catchment area.
Okay, so target area. Let me just make it target area or target points. Okay, so you can also go to issue of what? Issue of money. What? It can also be the people can also be chopping the money. Okay, so the revenue collectors can also be
leakages.
Okay, so I want to put depositing, or let me just say revenue fraud.
Pocketing of the money by the collectors.
Okay, so you can have the revenue fraud as a situation where the person will put the money in his own account, or the person will collect the money and go away with it. Okay, or lack of what? Lack of
So what about corruption?
Yeah, corruption can also be part of that.
Because when the collectors shortchange the system.
Okay. Even we are not even punishing those people for doing this one. So someone has done that. We need to punish the person and save as what? The example to others so that they will not do that. So maybe that one too, there is no punishment for those people also. So apart from this one, you can also suggest how they can improve upon their IGF. After identifying this one, you can make recommendation to them, at least one or two recommendation to them on how they can approve their IGF collection. Okay. Then you will now go to the next one, which is, I'm sure that will be grants and okay. So we have donation and grants. Okay. Donation. Okay. So the component of the revenue that is represented component of the revenue that is represented by the grant. Very important. Then you now draw this one. What is the component of the revenue that is represented by grant for the current year? What is the component of the revenue that is represented by the grants?
$3.25.
Okay, as against what?
0.76.
Okay, so it means that in the previous year, which is 2019, the company was able to what? To source for donor funds more than what in 2020, and the performance for 2022 is even below the budget. Okay, so after saying this, what do you think is the cause for this particular reduction? What do you think is the cause for this particular reduction?
We've not fulfilled the conditions attached.
Okay, so one factor can be like failure to what? Fulfill the
Fulfill the conditions attached.
conditions attached to the grants. That might be the reason that you are receiving that one. Or maybe we don't have any other projects, or we have the project all that we have that can be supported through donor support. We are all done with all those projects. Okay, so if you are done with the project, there's no projects, it means that you cannot be getting support from the people. That can also be another factor for that. Okay, so from that place, then you move on to your expenditure items. Compensation for employees, that is a problem for the compensation for the employees. So at least if you make it 6 items, that will be okay. Okay.
For the expenditure.
No, all of them. At least
all of them.
Yeah, it's going to be 6 months or 5 months. You don't have to do plenty things. So at least 6, then you put your conclusion over there, and then you move on. Okay. So let's come to the compensation for employees. Compensation for employees seems to be the highest what?
The highest percentage. It has the highest
Is the
percentage
highest
of-
expenditure
yes,
of the district assembly. Okay. In the current year, the compensation.
as compared to
Okay.
the previous year.
Just continue. Okay. Okay. The compensation for employees seems to be the highest expenditure component for the district assembly, as it forms 74.59% of the current revenue, or the current year revenue, as against 60.90%, and also 46.0, which is a budgeted figure for the 2020. Okay, what it means is that our compensation has increased. It has increased with a lot of margin. Okay,
astronomically due to ghost names.
Okay, so what you have to do is that what are the reasons for this particular increase? It might be as a result of ghost name. Okay, it might be as a result of maybe the compensation or the salary, or we have paid a lot of allowances. Okay, so you can, if you list the reason that is likely to be the
Government has engaged more labor force.
Okay, but whatever is going to happen is that the district assembly must investigate the increment and see what actually is the cause of this. So after saying all the causes, you still tell them that you still recommend that they should be able to investigate the compensation for employees, whatever be the case. If it's ghost names, if it's anything, they can actually remove it, because you cannot be budgeting for 46 for this year and you are going to be incurring 74.59, although your actual was 60.9, but it means that you have actually worked on the actual result for 2019. What is causing this particular expenditure? You have actually worked on it. That's why you are reducing your estimate for this year. But at the end of the day, you are still incurring that more. So it means that the measures that are put in place, or what we have eliminated, has not been has not been actually taken off. So you still have to investigate whatever is bringing that particular item. Okay, goods and services too, you look at the components for each of the years. And if you look at it, you can see that the people are doing better in terms of the budget. Okay, the budget is 31.79, but we are now incurring 25.8. But if you compare that with the actual for 2019, it is still increasing. What is the likely factor for this particular increase? You also talk about it. Then you bring the what? The interest. Interest is also another major important item. Okay, the interest forms what? 49% of the revenue as against 36.47 and also 29.80 budgeted for this year. Okay, this means that the entity has what? The entity has now increased their borrowing. The entity is now increasing, the entity is now borrowing more amount as more, they are now getting more debt as compared to the year, and this must also be what? The company must look at it, or the company must look for a cheaper source, or the company must now extend this particular debt to maybe a long-term debt. If it is a long-term debt, it is likely that the interest that you are going to be paying will be very low as compared to if it is a short-term what? A short-term instrument. So that is, you can use a compensation for employees, the goods and services, the interest, and you also, and the other expenses also seem to be some significant item. Then you can draw on your total expenditure. The total expenditure has increased by this one, and this might be due to the increase in expenditure for compensation for employees and those ones. So you just pick them, draw the component that they are forming, what are the percentages for each year, what is happening there. There's an increment. If there's an increment and it is a revenue, what is likely to increase it? If it's an increment for expenditure, what is likely to increase it? You talk about those ones. If you think about any recommendation, give it to them and move on. Okay, so that is common size. We have done the ratio too. Let's look at how they also ask you on issues of budgeting, how they will ask you for the budget item. Okay, I've said that if you come to budget, what we do is that we use revised budget against the actual. Okay, so you use your revised budget against your actual. So the revised budget is the actual budget estimate for the what? For the year. So we use the revised budget against the actual. What do we calculate? We calculate what we call the budget item. Okay, budget item. How do we calculate the budget item? It is calculated as the actual budget amounts minus the revised amounts, okay, or the revised budget amounts divided by the revised budget, all of these multiplied by 100. Okay, so let's pick that question over there and we, okay, so let's try to see if we can actually, yeah, Auntie Bell, are you there? Can you take that for us?
Yes, please, I'm here.
Okay, take it down for us so that we can all go to our bed and wake up and do whatever we want to do. Okay.
Question 3.
Yeah.
Below is the revenue and expenditure extract of the consolidated fund for the year ended 31st December 2021. Consolidated Fund of Ghana. Statement of the financial performance for the year ended 31st December 2021. Additional information. The Minister for Finance has presented a mid-year budget review to Parliament that included a supplementary or additional budget for 2021. The Minister has cited several local and international reasons for the budget adjustments. The approved supplementary budget is as follows. Compensation of employees, 11,500. Goods and services, 17,000. Interest, 2,500. Social benefits costs, 1,500. Subsidies, 1,800. The total, 32,680. Require prepare a budget performance report showing relevant variances and explanation for the possible causes.
Okay. So this is how you prepare any of them. They can bring any of them, but they like bringing the ratio more than any of them. Okay. So your budget performance reports. Okay. Budget performance reports. Okay. This is how you are going to be doing it. So you have the items here. So you have your revised budget here. You can ignore the actual budget. So you have your revised budget here. You can ignore the original budget rather. So your revised budget. Then you have your actual budget. Then you have your budget outturn in amounts. So you can calculate the budget outturn in amount, in figures. So budget outturn using figures. And you have the budget outturn using percentages. Okay, so the budget outturn using percentages. Okay, so let's now have the amounts, which is a currency here. Okay, so let's have the budget, which will be the currency, which will be the currency, which will be the currency, but that one will be in percentages. Okay, so let's do it in the tabular form. Okay, so let's go to our revised budget, or let's go to our items. Let's go to, you have your revenue items. Okay, let me just put the revenue at the top here. The revenue. Okay. So let's go to the revenue items. Has any of them been revised? The revenue items. Were there any supplementary budget for the revenue items?
No.
Okay, so it means that the original is the same as what? The revised. Okay, the original is the same as the revised. So let's come to our revised one for, the first one is what? The first item is what?
Tax revenue.
Okay, so tax revenue. Our revised figure will still be the original. 300 and what?
270.
The revised is original.
The revised would be the original.
Yes, please.
Oh, okay, so 312.
Okay. So we have the actual. They will give you the actual. So what is the actual amount?
270.
270.
Okay, 270. Okay, what is happening there? We are receiving less than that. This is a revenue, isn't it?
Yes.
So
We are
what
receiving this.
the outturn will be what? 312,000 minus 270. I'm having outturn to be 42,000, isn't it?
Yeah.
Okay. So what will be the percentage for the outturn? It will be the difference between the two divided by the revised, like the way actual money is the what? The revised divided by the revised multiplied by 100. What are we having?
13.46.
13.46. Okay. So that will also be negative 13.46. Why are we saying negative? This is revenue. So if you are generating more, that is going in your favor. If you are generating less, that is going against you. Okay. So let's count to the non-tax revenues. There is no revise for it, so the original will still be the revised amount. So we have the non-tax revenue. Okay, non-tax revenue is what? How much is the original?
39,000.
39,000. And the actual was what?
26,700.
26,700. What is the difference?
12300.
12300. What will be the out 10?
31.54.
Okay, 31.54%. Okay. The next item is what?
Grant and donation.
Okay. So we have grants and what? Donations. Okay. What is the revised?
10,800.
Okay, 10,800. Actual is what?
7,200.
7,200. What is the difference?
3,600.
3,000.
600.
Okay. The out 10 is what?
33.33.
33.33. Okay. So the percentage should be out of here. So we now count to expenditure, isn't it?
Yeah.
Okay. Expenditure, you have to know that some of them has been what? They have
Revised.
added some items to some of them. Okay. So let's come here. Compensation for employees has increased by what?
11500.
So what will be the revised budget?
Will be the 11,500.
No, the budget is
Oh.
the budget. The original figure was the original figure was
124,800.
and they have now added a supplementary amount to it.
Okay.
Supplementary will be added and that will now
So
increase it. Yeah.
Okay, so it will be 136.
136.
136.
300.
Okay. So the amount that we budgeted for was first there's 124,800. But now they realize that no, this amount will not be enough. So they have to submit a supplementary budget. The supplementary budget is the budget added to the original budget. So it means that the total amount for the budget now will be the one that was budgeted first plus the additional funds that Parliament will be giving to them. So that will be 136,300. Okay. What is the actual amount spent?
121,500.
121,500. Okay. What is happening there? Is it reducing
We
or?
spent less.
Yeah, spent.
So that will be what?
14800.
Okay. So if we are spending less, is it going to be positive or negative?
Positive.
Now, if you are showing positive, it means that the figure is increasing. Okay.
It's negative.
So this will be.
The price is more than the actual.
Okay.
Should be negative.
So we are having, okay. It depends on how you are interpreting this particular one. Okay. If you're having an out 10, that is going to be, okay. It depends on how you are interpreting this. Okay. If you are having positive over there, if you're having positive, the positive to somebody can mean that, okay, the revise has increased. So the expenditure has increased. Maybe the person is having negative, it means that the expenditure has reduced. Someone can also use the negative as what? As an increase in the cost. So if the cost is increasing, someone can use it as negative. So you always have to be very careful with what? With the calculation. But how do you calculate it? It should be the actual, the out 10 should be the actual minus the revised. Okay, that's how you have to calculate it. So you can state it that the out 10 is calculated as the actual minus the revised. If you're also calculating revised minus the actual, you also have to state that one. There's no problem with that. So we don't have one way of doing this one. So you just have to say that, okay, the actual is calculated, the out 10 is calculated as the what? The actual minus what? Minus the revised, or the revised is calculated, or the the outing is calculated as a revised budget minus the actual. No problem with that. So what are we having?
10.8.
Okay.
6.
So
10.86.
so it means that this has reduced
Negative.
10.86. Okay. Let's come to
Hello, sir.
yes, ma'am.
I thought the supplementary budget
Okay.
replaces the original one.
No, please. Supplementary budget is in addition to the
To the
original budget.
original.
Yes, please.
So which one replaces the original one?
Unless they are giving you revised budget. If they
Revised
give you the
budget.
revised budget, it means that they have added the supplementary to the original to get the revised. Okay.
Okay,
They
but if
can
it's
do it.
supplementary, you add it to the original budget.
Exactly. Exactly.
Okay.
So revised is calculated as the supplementary added to what? Added to the original. But the question, they can give you a question where they will give you both original and the revised. Use the revised. It means that the revised, the supplementary has been included in the revised. So you use the revised. Are you okay?
Okay, thank
All
you.
right. Thank you. All right. So let's come to goods and services. Goods and services. What will be the revised for? Please, let's just bring the actual for all of them because the actual, you are not going to be doing anything for the actual. So the actual will be how much for goods and services? The actual is 54,000. 54,000. Okay. 54,000. Okay, can we get a revise for the goods and services? The revise will be
The
We need
revised
to
will be
look for the simplest.
13770.
Okay. 13
7700.
7700. What is happening there?
They spent less.
Okay. So it means that that figure has been what? The okay. Let me the actual is the first one. Okay. Original.
Yeah.
Okay. So it means that there's a reduction in the by how much? What is the reduction?
83,700.
83,700. What will be the out 10?
60.78.
50.
60.
Hey, the reduction is too much.
Please, why is the supplementary?
The supplementary is at the down there. 60 points.
678.
Okay.
Hello, sir.
Yes, please.
So, please let me understand. So in this case, it means that their expenditure, they are doing well in respect of their expenditure.
Yes, please. Yes, please.
Okay. So,
Yeah. Okay. So consumption of fixed capital, there is none. Okay, so that will be consumption of fixed capital. So consumption of fixed capital, there is no base for the consumption of fixed capital. So we don't have any figure for the revised, and we don't have any
Yeah.
figure for the actual is what
1950.
Okay, 1950. Okay. The out 10 will still be what? The out 10 will be 1950. Okay. But this one, how do you calculate the percentage? There is no base, isn't it?
Yeah.
Okay. So you can just leave that one like that because there's no amount that we are saying that we are going to be increasing that. Okay. But this one, we don't have any control over the consumption. Maybe the time we don't have any asset that we purchased. That's why we don't have any one for that particular one. So we have the interest here. Okay. The interest, what will be the revised for the interest?
84,600.
84,600. Okay. The revised, the supplementary is 2,500. Okay. So we have 84,600 against what?
81,000.
So 84,600 against 81,000. That's a
Sir,
reduction. That's a reduction of what?
3,600.
Okay. What will be the outturn percentage for that?
4.26.
4.26 negative. Okay, let's continue with the other ones. 1, 2, 3, 4, 5. One, two, three. No. Okay. Then we have the budget outstanding. And we have the outstanding in percentages. Okay, someone is, why is the composition figure negative? Why is the composition figure negative? Someone is asking. Can you help?
Because revise is higher than.
Okay. All right. So our negative is not an increment. Okay. Our negative is not increase. Our negative is a reduction. So whenever you see negative, it means a reduction. Okay. So that is why the compensation for employees is a reduction. So everything in a bracket is a reduction, not an increase. Okay. So we are budgeting to spend 136,300 and we have spent 121. It means that our figure has reduced by 14,800. So the 14,800 is not an increment. That's why I was saying that you can say that you have calculated your outturn as actual minus the revise. Someone can also say revise minus the actual. There is no problem with that. Okay, so anything that you are seeing in a bracket over here means a reduction. Okay, anything that you
So
are
is
seeing
it the
in a bracket
same?
means.
Can that same thing be applied to the revenue aspect?
If you are doing the revise minus the budget.
No, in the bracket, the one in the bracket, revenue in the bracket.
The one that is in the bracket over is the same thing that we are using for all the outturn is calculated.
What I mean is the effect of let's take grant and donation.
Yeah.
We have the outturn 3,600.
Yeah.
Does it mean the revenue has reduced?
That's the revenue. Our revenue has reduced. The amount that we want to collect is 10,800. We have collected only 7,200. So our budget falls short by 3,600.
Okay.
Yeah. Okay. So anything in the bracket over here means a reduction to us. Okay. But anything that is not in a bracket makes an increment to us. Okay. So we calculated our budget outturn as the actual minus what? Minus the revise. If you also do the revise minus the actual, the interpretation that you are going to be doing will be the same as the interpretation that the person that is using this will be doing. Are you okay? All right. Okay. Let's okay. Let's count to social benefit cost. Social benefit cost. So we have the social benefit cost. Okay. Revise will be how much?
3,300.
3,300. Actual is what?
1,005.
1,500. Okay. Our outturn will be what?
1,800.
Okay. And our percentage will be what?
54.55.
Okay, 54.55. Okay. The next one is what?
Subsidies.
Subsidies. Subsidies. Revise is what?
1,350.
1,350. Actual is what?
1,080.
1,080. That's a reduction of
270.
70. Outturn will give us what?
20.
Okay. So 20. The next one is what?
Grants.
Okay. Grants. Were there any supplement for the grants?
No.
Okay. So original will be the revised. How much?
2,910.
Please, this is how we calculate our outturn. Our outturn is calculated as actual budgets minus the revised. This is how we are calculating the outturn. Okay. So anything in a bracket means a reduction. This is how we are calculating our outturn. Outturn is calculated as the actual minus the what? The revised. So anything in a bracket over here to us is a reduction, not an increment. So the expenditure in a bracket means a reduction. Revenue in a bracket means a reduction. Everything that is positive is an increment to us. So we calculated our outturn as actual minus the revised. That is why everything is in brackets. Expenditure being a bracket doesn't mean the expenditure is increasing. That is a reduction in the expenditure. But if the expenditure is positive, that is why we are saying that that is increasing. So our outturn is calculated as actual budget minus the revised. We are not doing revised minus the actual, no. Our outturn is actual minus the revised. Actual minus the revised. That is how we are calculating.
With the expenditure is okay, but the revenue, when you are doing the variance, a revenue in bracket means you are exceeding your revenue level is increasing. But this one we are comparing budget, so I don't think the same reason will be applied.
For the expenditure, for the revenue.
For revenue, yeah.
You are budgeting to get 3,200. At the end of the day, you are getting 3,000. What is happening? Are you getting?
There's a reduction.
That is the reduction. That is what the reduction is in brackets.
Yeah.
Anything that is reduction is a bracket. Okay. Anything that is in a bracket is a reduction to our budget, not an increment. But if you also want to calculate it, there is no one way of doing this. I'm calculating my outturn as the actual minus the revised. So this is how I'm going to get my own. If you're calculating your outturn as the revised minus the actual, you'll be getting positive for all these figures. There is no problem with that. So if you are going to interpret it, you have to know that your revised is lower than this one. So the positive over here should not mean an increment to you. But if I'm doing it like this, I'm not going to suffer before I will do the interpretation because I know that everything over here is a reduction. Okay, so let's move on. The grant is what? What did I think? 12
2910.
2910. Actual is what?
2700.
2,700.
2,700. Okay.
7.22.
7.22. Okay. Is there any other expenditure?
Other expenditure.
We have other expenditure.
Yeah.
Okay. So other expenditure. What are we having?
32,000.
32,000. Okay. Against what?
34 and 20.
34 and 20.
And 20.
What is happening?
2020.
2020. That is an increase, isn't it?
Yeah.
Okay.
6.31.
6.31.
Boko.
Is there any other thing that we have to? Okay. So let me see if there's something. Okay. So we have, if you like, you can do, okay. You can also do it for, maybe you can do it for the total revenue or just ignore. Okay. Net operating, you can also ignore that one. There's no problem with that. So they say this is a budget performance report. Okay. This is a report, but they say it should show relevant variances and explanation for the possible causes. So that is the figures that we have calculated and the variances. Okay. So right now, what are the possible causes of these variances? Okay. Tax revenue has reduced by 42,000. What might be the cause for the reduction in the what? In the budget? What might be the cause for the reduction in the budget for the tax revenue?
Okay, we can say that the taxpayers failed to file their returns.
Okay, so there can be an issue of tax. There can be an issue of tax evasion.
Evasion.
Okay. What again? Okay. There can also be an issue of revenue loss where people will now use the money. Okay, some people that they might be owing that they will travel out of the country. That is the end. And some people they might collect the tax and they will pocket the money. Okay, so that can also be an issue of revenue. Also over there, we might also be using
Revenue leakage.
okay. We must also be using inappropriate procedures to collect the revenue. Okay.
And please explain that point for me.
The inappropriate procedures to collect the revenue.
Yeah.
Yeah, instead of you to go to the person and explain to the person why the person should pay tax, you go there and be fighting with the people. People will not pay.
Oh, okay.
Okay. So you should tell the people why they should pay the tax and what will be the benefit of the tax. So you can also see maybe lack of public education.
That's the use of Amwabi method.
Okay. So the people will say they will not pay, and you cannot do anything to them. Okay. So these are the likely causes for those variances. Okay. So let's come to the non-tax revenue also. What might be the cause for the non-tax revenue? There's a reduction there. We had budgeted for 39,000, but we ended up collecting only 26,700. It means that we collected less than that amount. The non-tax revenue is going to be collected by those in charge. okay, is going to be collected by those in charge of those institutions. So if it is court fines, it will be collected by those people over there, and that will be paid to government accounts. Okay, so it might happen that these people, they are also collecting the money and they are pocketing the money. Okay, or there might also be a situation where there is a there is one now, people are now abiding by the laws of the country, and there's no more fines. So you see that if you are driving on the road and people, if you are beating the traffic, they can get you and they will fine you and you have to pay the penalty and those things. So maybe right now we are acting as a law abiding citizens. So there's nobody to be called a victim.
Are you sure those monies get to the government?
Oh, I have no idea.
Farmer-led.
But what we know is that everything about the fine and penalty that is due to the state must be paid into the coffers of the state. But I don't know.
When the police is taking money, does it send it to the state coffers?
That one is enters his pocket.
Okay, so let's come to the grant and donation. What might be the likely cause for the grant and donation also to be a reduction? Okay. The grant and donation, we are budgeting for 10,800. We have gotten 7,200. That is below our okay. So okay. So let me take this one. Okay, hello, so please, I thought if the actual expenditure is budgeted, it is favorable, hence positive figure, and the actual is more than the budgeted, it is adverse. Hence the difference must be in brackets. It seems what we did is the opposite. Yeah. So I'm saying that my budget outcome, the way I'm calculating it, it is the actual minus what? Actual minus the revised. So any figure that it is in bracket to me, it is what? It is a reduction to me. Okay. Anything that is in bracket to me is a reduction to me. Okay. But if you want to make it positive, there is no problem. For me, anything is in bracket, that is a reduction to me. Okay. Anything that is in a bracket is in bracket to me.
It's clear. It's clear.
Okay. Okay, but if you want to do it a normal variance, there's no problem. The actual and that one, there's no problem. But this is how I'm calculating it. Okay, anything in bracket is a reduction to me. Anything that is positive is an increase to me. Okay, so if you want to go with the favorable and your adverse, there's also no problem with that. Are you okay? Okay. All right, so that is you can just compensation for employees also. You can also look at that. You just have to state how you calculate the outcome. The way you are saying it, if you calculate it like that, there's no problem. But this is how I'm calculating my own in the exam. Anything that is in brackets is a reduction. Anything that is not in brackets, it is an increment. Okay. So seniors, this is how far. Okay. This is how far we have come. Tomorrow, 10 a.m., we look at the final account. Okay. Please, any other issue? All right. So
I didn't talk about the grant and the donation too.
the what?
The grant and
the
donation.
The reason.
The reason.
You are the one going to write the exam. So why would I give
The
you?
donor funded projects are finished. You are not complying with the conditions attached, and therefore the donor community has stopped.
Okay. So you can do the outcome the way you understand it. Okay. So this is also my understanding. So if you go with that one that you are saying, there's no problem. Are you okay? So if you go with the favorable and then the adverse, there's no problem. But this is my own. Everything in the bracket is a reduction, and everything in that one is what What of flexible budget? Flexible budget, that is mostly for, you should be thinking about cash budget. Flexible budget is always for management accounting, and I haven't seen the new syllabus. I haven't seen that one, so you should be focusing maybe on cash budget. You should be focusing on cash budget. Okay. So yeah, so tomorrow we do final account, and you go there and do whatever you want to do to pass. Okay, thank you all for coming. I'll see you guys.
Please, what time tomorrow?
10 a.m.
10.
Yeah.
Okay, thank you.
Oh, Linus, are we done with the FM, or you continue tomorrow too?
Yeah, we have FME at dawn.
At dawn.
Yeah.
Okay, right. Thank you.